On now, from market technicals to market fundamentals, Christy Mathai from Quantum AMC is now joining in with his views in the markets and ideas for investing. Christy, thank you very much for joining in. First, a big picture call on the earnings that we've seen. Where have the positive, negative surprises, where have you seen? And what are the big ideas now?
Thanks, Rima, for having me. So clearly, if you were to just look at, the past several quarters of earnings, this is possibly the first quarter where the earnings downgrades has not been as significant as you've seen in the past quarters. And so, broadly, the general expectation is that the earnings should improve from here on, aided by, the festive spends, the GST cuts, and so on and so forth. In our view, if we were to just look at our portfolio companies as a whole, what we find is the upsides are looking attractive now versus, let's say, what we had 6 to 8 months back. And, if you were to just look at the broader macro, that is, the monetary easing cycle that we are in, as well as, the GST cuts or some sort of consumption boost, it should slowly trickle down to earnings as we look, going ahead. So in terms of sectors, if we look at the broader spectrum, the large components of the index, like banking, things have behaved well in the sense like, there is no major asset quality issue. The credit growth as we speak is slowly inching up. So broadly, if you move to the next fiscal year or perhaps later, you should see broadly good earnings growth because bulk of the margin pressures are slowly on the base. Similarly, if you were to look at the other sectors like IT, and again, there's been a pretty stable quarter. If you were to just again think about a big picture, perhaps all the built up in terms of what we had in the past, in terms of the TCVs, which sort of did not come through, bulk of it is behind us. So incrementally, the TCV growth in our view should lead to some of the top line growth as we speak in that sector. And autos, everything hinges on what we want to look at possibly from the second half because we had a very short participation in the month of the last quarter. So broadly, from a larger sector, things are looking constructive in our view.
Christy, a lot of chatter has been around the large deals that you're seeing within the financials, be it the mid-sized financial space, big money coming in there. We saw that in Federal Bank, we saw that in RBL Bank, and a lot of other lenders as well. There is also talks going around with another potential deal taking place. What about the financials? Do you still bet on the smaller private financials or stick to the larger ones or go for the state-run PSU lenders?
Right. So from our perspective, we are largely sticking to the large banks. We do have a private public name as well. But see, broadly, if you were to just look at, the whole banking spectrum, especially some of the SFBs, some of the regional banks, so they have their own place in their specific sectors. So beyond which to scale up what we have seen in the past is a bit difficult. And somehow it becomes easier for the larger banks to take share. And that is what has happened in the, past several years. So, there were a lot of challenges, for the past 2 years. And given the change that we have had from a regulatory perspective in terms of easing, we think all of these put together would be conducive for growth. The credit growth as we speak is slowly improving. So we remain quite positive on the larger banks and, valuations from our perspective are also looking pretty attractive in that zone.
Also, Christy, there is a lot of the earnings that have come in with regards to the IT sector, and they've been okay, if not better or good for that matter. But for a sector that is export oriented, that is facing or grappling with a lot of uncertainties currently with regards to the H1B, the uncertainties over the trade deal as well between the two countries, would this still be an investable sector considering the underperformance that it has had and that the valuations are now trading below historical averages?
Yeah, to our minds, it does. We were present in that sector. See, from our perspective, H1B could have been a big issue, but things are like, things have really settled down on that front. And we have seen the localization efforts by a lot of these companies. It's upwards of 60-70%. We're just looking at the top 5 companies and seeing the total headcount that is exposed to H1B. It is sub 0.6, 0.7%. So in that sense, it doesn't look material from a risk perspective. It's only the discretionary spend as we speak has not come back. And we are seeing some signs of that picking up from some of the results that we have seen from some of the foreign companies, in the IT services. So we are sort of hopeful. It is very difficult to predict when that will turn. In a way, this is also very globally cyclical in that sense. But we have had a period of sort of these deals not coming through for the last, 2.5 years. So somewhere we have to see the services component also participate in the broader tech spend that we see.
Thank you, Christy, for joining in. Get into a break. On the other side, we'll get back to corporates talking about numbers. The management of Stuffcraft will join in. Stay tuned.